mixed management and focuses Jupiter Wagons, which also reported its fourth quarter earnings yesterday. Now, what we saw was a revenue downtick about 6% or so, margins at the levels of 14.6% as compared to 13.2%, and net profits are about a 1.8% of a downtick. In terms of where the order book is concerned, order book stands at 6,301 crore. But to discuss more on the FY26 outlook for the company, we are joined in by Vivek Lohia, the MD of Jupiter Group. Welcome to the show, Mr. Lohia. First off, the fourth quarter earnings. Now, we did see margin expansion at the face of it at the levels of 14.6%, but it's the revenue where we've seen a particularly downtick, but overall FY25, a 9% is the kind of growth that we are looking at. Talk to us about the fourth quarter as well as the year gone by.
So, thank you for inviting me. So, definitely, if you look at year on year, we have had a substantial growth in revenues. So, this year we have achieved 4,000 plus in terms of revenue. Fourth quarter, there was a supply issue from Indian Railways in terms of supply of wheelsets, for which we had a slight production delays. So we again in this first quarter itself also that challenge remained a little bit, but we expect the wheelset supplies to improve from next month. So this year we have set ourselves a target of about last year we produced about 8,000 wagons, and this year we have set ourselves a target to produce about 10,000 wagons. And given that if the wheelset supplies are consistent, we are very confident of achieving those numbers.
Right. Vivek, good afternoon. Hiral on this side. Vivek, you also, you did mention about the supply issues from railways. So one, railway wagons execution has been lower this time around at 2,375 wagons during the quarter as compared to Q4, as well as if you have to look at Q3 of FY25. Now, leaving this aside, if you have to look at the coming quarters, FY26, what is that number that you're looking at? Because from what I read, around 10,200 to 10,800 is the kind of range that you're anticipating. But do you think that is something which will be achievable, taking into consideration the challenges that keep coming in?
Definitely, in terms of our production capacity, we have built a very strong production capacity, and we are confident of achieving those numbers. On the private side, definitely about next year, the order books which we are going to be executing, about 50% of the order book is on the private side, where we have our own wheel production capacity and we are not depending upon Indian Railways. So we are very confident of achieving that. We have been told by the Indian Railways that post-June, the wheel supply position is going to improve and there will not be any challenges. So if that happens, we are very confident to make up in terms of the loss of production which we have suffered in the first 2 months. But that is the only caveat. Beyond that, we are pretty confident of achieving the targets which we have set ourselves.
Okay. So Vivek, what you're saying is that the brake and wheelset business will definitely double in terms of FY26, correct? From FY25. And if that is the case, what is the revenue contribution you're seeing from this business in FY26?
So on the wheelset business, we expect the revenues this year. We did a revenue of 300 crores, which we expect it to be 600 crore plus, and we are very confident on that. Further, we are undertaking a huge expansion in Odisha, where we are investing over 2,500 crores to build a complete integrated capacity to produce about 100,000 wheel sets, and that is going to be a future growth driver. Not only these wheel sets will be used for the Indian market for our captive consumption for the high-speed business in India, but again in Europe itself we have a captive demand from our partners, Tata Wagonka, who are the biggest producers of railway wagons in Europe. So they require close to about 25 to 30,000 wheel sets for their own captive demand. So that is a project we are very, very gung-ho upon, and we see definitely a demand in the market, because in India today there is a huge shortage in terms of capacity to produce axles and wheel sets, and India has been a major importer of these items.
So just a bit on the last part, you've said that India has been the largest importer in terms of where these wheel sets are concerned. So considering more of these capacity and production coming on stream, what is the kind of advantage that you see for Jupiter Wagons going forward? And as far as where the Europe demand is concerned, do you see any bit of pressure in terms of order inquiries currently, seeing the global uncertainties that are there?
Definitely, see, if you look at it, the global market itself, there is a glut in terms of wheel sets availability, and especially in Europe. So we don't see any challenge because the railway business, if you see globally, is expanding, and there is investment not only in India but in other markets also in this business. So we definitely see a huge opportunity in this particular segment. And in India itself, today, when we talk about wagon production, the biggest challenge which comes not only to us but to the entire industry is the availability of wheel sets. So I think once there is a local production, you get rid of a lot of this uncertainty. And when it even comes to the cost advantages, if you look at a typical wagon, about close to 30% of the cost is in form of wheel sets which go into a wagon. So for us, that itself is a huge backward integration which we achieve, and that will also result in not only in availability but in overall expansion of margins for us.
Well, just moving forward to this, Odisha expansion is an important one for the business, with the target being of around 1 lakh of production. Just want to understand in terms of revenue, what's the kind of overall picture that you see in terms of the incremental revenue growth? I think the projection is around 3,000 crore of an odd. So from which year onwards do you expect this number to be on stream for the business, considering that FY25 you've clocked in about revenues of 3,963 crore. So it's almost a double of what we are looking at in terms of where this segment is concerned.
So definitely the revenues I think, will incrementally keep on going year on year. And by FY28, we expect the entire 3,000 crore of revenue to get translated. But next year, our axle line, by middle of next year, our axle line becomes on stream. So that will definitely add to revenues. And by 27 is when we expect the wheel line to become on stream. So by FY28, the entire revenue will get captured. But obviously, you'll have an incremental growth in revenue year on year.
Right. Vivek, another aspect that you've mentioned is where you're anticipating a major tender coming in from the Indian Railways in the second half of FY26. So what is the size that you're anticipating? That's one part. And number two, just to understand that yes, the capability for a Jupiter Wagons is there in terms of capacities, but a lot of times because of external factors, unavailability of some parts, you miss the guidance or you miss your own production target as well, right? So if you have to look at FY26 then, what is the kind of risk you're sitting on? Because again, we're looking at 10,000 wagons for FY26. So what are you building in? Two-part question.
So, again, in terms of, as you rightly said, that the only challenge which we see right now is in terms of the wheel sets. Otherwise, we don't see any challenges in terms of executing the order book. And that is something today, unfortunately, it is not in our control, and we have to depend on supplies by Indian Railways on that. But otherwise, we are pretty confident of achieving the targets. In terms of the wagon orders, definitely, again, to give any kind of number in terms of the quantity, it's very difficult. But if you look at the kind of expansion which railway is doing in terms of the infrastructure when it comes to freight logistics and their numbers, so it could be anything between 40 to 60,000 wagon tender which could be there.
Okay, and Vivek, my final question to you is also just a quick bit on the electric mobility side of the business that we are seeing. Now, you've discussed about launching the first commercial EV GEM TAs as well, and the annual production capacity being of 8,000 vehicles. Just want a quick update on this one. How are the order inquiries shaping up for this one?
So again, this business has two parts. One is the vehicle business and one is the battery business. The vehicle deliveries we have just commenced this month, and the market response has been very positive for us. So we expect by the second quarter to achieve a target of about 100 vehicles every month. And this year we have targeted to sell about 1,000 vehicles, and we are very confident of achieving those numbers. On the battery side, again, I think the that is a business which we are very, very confident about. Especially, we are targeting the battery energy storage segment, which we are seeing considerable order books coming our way. And if you look at the demand by 2030, it is projected that India would require about close to 5 gigawatts of battery storage. With the kind of the investments which are happening on the solar side. And today, most of these battery storage units are being imported out of China. So there is a huge scope there, and we are seeing the demand also coming in. Besides that, today we are working with other sectors also. For Vande Bharat, we have a huge order book from Siemens and from other players.
Right.
We have got now a huge order book from Godrej for their forklift segment. And plus, we are now getting order books from other segments on the battery side. So there we are going to see a huge expansion in terms of our revenues.
Right. So Vivek, I think from what you're saying as well, I think any downfall or downtick that we could see on the back of wagons will probably be met by your other segments as well. And I think that's going to be the strategy we should be watching. Thank you so much for joining us on the show and sharing the views you have. So that's the management of Jupiter Wagons.